I believe that we are in the midst of some of the biggest change that has happened to our world, whether it be in an economic or a governmental situation right now. And as a result of that, it's going to give me an opportunity to make a lot of money by investing in this change that I see happening. Now, what I have to recognize is there's going to be some risk. There's going to be some tremendous big winners, and there's going to be some tremendous big losers. So this is the time when I think I need to scale back my risk coefficient so that I don't have any big losses that offset any good gains that I make. So I went through my 61 stocks that I watch relative to the AI revolution, the change in our world from synthetic energy, which will continue to grow, to synthetic knowledge, which is my interpretation of AI. And with that in mind, I said, okay, let's look at these 61 stocks purely from a financial point of view. That is, take all the fluff out of it. Take the Palantirs and the Teslas that you're in love with, and say, okay, let's just look at them from a financial point of view. If this was a company that was here in Birmingham, and I could walk into the headquarters and interview the CEOs and the CFOs and look at their books and spend 3 weeks there, would I be willing to write a check to invest in them based on their current history, their past history, and their future projections? And to answer Homer's question, and they were all honest with me, and they all were willing to say, this is what we think our earnings are going to be over the next 3 years, and this is what we think our bottom line earning will be on January the 1st, 2028. And all I would have to do is say, okay, what is a fair PE ratio? And that would be 25. And say, okay, with that PE ratio against your projected earnings, this is what I anticipate the price of the stock will be, and I'm comfortable with that. If I could do that here in Birmingham, that's how I'd like to invest. So that's what I did with my 61 stocks. And I wasn't able to go to their headquarters and interview their C-suite, but I was able to go into their books, their balance sheets, their income statements, their projections, Wall Street's projections, and I came up with 7 stocks that between today, February of 2025, and January of 2028, 7 stocks that I showed on my thumbnail that would give me a return in excess of 200%. I found another 9 that would give me a return in excess of 100%, and another 9 that would give me a return of over 50%, and little or no risk involved. So with that intact, I said, okay, I want to broaden the portfolio even beyond that. And what will my average return be of the portfolio that I want to take forward? And then with the allocation to spread the risk, because there are some stocks that I want to own that aren't going to give me 50% return between now and then. And they might be Google and Apple and Amazon and Microsoft. They may be down around 30% return. Well, I still want to own them because beyond the 3 years, they are going to be the big winners of the delivery of AI. So I built this portfolio that is going to give me, over the next 3 years, a total return of 77%. My portfolio will grow by 77%, which over the 3 years gives me an average return of 21.5. Now, again, this is all based on their earnings being what they're projecting to be and their PE ratio being 25. Now, is that realistic? No. No, it's not. Because there are stocks such as Palantir, who today's PE ratio is 190. But yet, I won't buy that because it doesn't fit my financial categories. If I could go to Palantir today and look at their books and do everything, and it came back and said, based on their price right now of $109 per share in 2024 with their current PE ratio, no, I wouldn't. I won't buy it because it doesn't fit my financial model. And my financial model is designed to minimize risk. And so that's what I'm doing. And that's what I'm going to share this Friday with my people on my Stock Talk. I'm going to walk them through the particulars of how exactly I identified the 7 stocks with over 200%, and every one of the other stocks, and how I will share it with them on a continuing basis over the next 3 years so that we can achieve this average return of at least 21% with a PE ratio of 25. And again, I know that some of them are going to have a PE ratio of 50. It's given. So I look at this and say the worst I can do based on the data that I've been able to gather from the internet with AI is a 77% growth in my portfolio between today and January the 1st, 2028. So if you want to be a part of that, show up at the Stock Talk this Friday, or after Friday, find the link to it as I walk my tribe through exactly what I'm going to be presenting to them going forward. Now, you can come for free because we have right now a 14-day free trial. You'll go to the link to the website. You'll sign up. Yeah, you'll give us your credit card, but you can cancel it after 14 days and come to the presentation that I'm going to make Friday. And if you can't hit the time, 3 o'clock Central Time, we will post it on the internet. And for 14 days, you can walk through it, see if it works for you. And then maybe this is the way you want to invest, and you want to take the risk out of investing in the stock market and exceed your past experience. I hope to see you on Friday.